Good morning, everyone. Welcome to the second day of the Consultative Forum. I hope that you had a good rest and that you're ready for some more interesting discussions on the role of the industry, this time in closing the protection gap for disaster risk insurance. I will now try to summarize the day one of the Consultative Forum. So, what are the most commonly raised issues among the policymakers and regulators when it comes to addressing the topics such as climate and disaster risk and addressing the protection gap in Africa specifically? Yesterday we heard about collaboration and partnerships, conversation and dialogue, sharing the knowledge, trust, all soft skills. Climate and disaster is an extraordinary and complex risk, and it cannot be addressed either by the government, the industry, or a regulator alone. The art of collaboration is the only way to move the conversation forward into systemic action. So, who are the stakeholders involved, and what is their role in closing the protection gap? It is the government, the regulators and supervisors, and the industry together. Government plays an important role in risk mitigation. It has the capacity to coordinate work streams of different stakeholders. It can provide public data, invest in financial literacy, facilitate access to insurers, or act as the last resort one. We've heard about the Moroccan example of the Solidarity Fund managed by a public company that covers those who are uninsured in case of natural disasters and in such way incentivizes people to get insurance. The regulator and supervisor's role is critical as it can be an enabler but also an obstacle to developing sound insurance markets. Openness to change, to harness the AI, big data, and insurtech in general, and the use of technology in distribution or claims adjudication, for instance, leads to greater transparency and ultimately instills trust. Another key word from yesterday, trust. The industry has an expertise on risk assessment, and by sharing this knowledge, they support risk management within the public sector. The protection gap is an opportunity for the industry to grow, all the while helping the population to be prepared and better manage the financial hardships that disaster events can inflict. So to conclude, partnerships and broader discussion involving all these stakeholders is what is necessary to come to a better understanding of risks and actions necessary to mitigate these risks. The old styles of management do not work in issues as complex as this one. We need to better understand the customer in the low-income market. What is affordable for them, and how can product offer adequate value for money? Tech and simple and clear communication play a role here. And lastly, we talk about access to consumers. But what about access to governments in some cases? I will leave you with that. Now, the second panel today will be moderated by Janice Angove, who is with us today on behalf of Access to Insurance Initiative. Janice Angove is a qualified actuary and lecturer in actuarial science at the University of Witwatersrand. Janice was previously involved in the implementation of the capacity building strategy for insurance supervisors in sub-Saharan Africa for A2II. She has been involved in various capacity building projects for insurance regulators and developing regulatory frameworks for microinsurance in Southern and Eastern Africa for the World Bank, Finmark Trust, and UNDP and UNCF. The panelists and discussants of today's second panel are Victor Wang, who currently leads the actuarial and analytics team at Pula Advisors and serves on the board of directors at Anea Asna. Prior to Pula, he worked at Intact Financial Corporation and Cigna Corporation, working on car and home insurance and Obamacare, respectively. Shola Ajibade, Shola is an accomplished reinsurance underwriter with over 25 years experience in insurance and reinsurance. His most recent role was with Aon Benfield, South Africa, where he held the position of executive for Sub-Saharan Africa. And prior to joining Aon Benfield, he has worked on a number of insurers, reinsurers, and insurance brokers in reinsurance and management positions. Eric Kouagu Chusu is a statistical engineer at the Insurance Regulatory Authority of Cameroon, Yaoundé. Kip Courier Koskai, who is a senior technical advisor to the African Risk Capacity Agency, ARC, with extensive experience in financial risk management, financial underwriting, and country risk assessment from several global financial institutions. I'm inviting everyone to come up on the stage now for the second panel.
Good morning and welcome to the panel on the role of the industry in closing the protection gap for disaster risk insurance. So we're going to look this morning at a few success stories and then some of the challenges that still need to be overcome in providing disaster risk insurance, particularly to the low-income market. So we'll start the panel off with two presentations from Victor and Shola, and then Kip and Eric have got a few questions that they want to pose to the panel. So I'm going to hand over to you, Victor, to kick off the discussions.
Cool.
I don't know if you want to maybe introduce Pula.
Yeah, I have some slides on that.
In
I'm just gonna get them.
In time.
Sorry for this.
Both of those are French.
Hello. Working.
Okay, there we go.
It's on.
Perfect. Cool. So my name is Victor Wang. I lead up the actuarial team at Pula Advisors, and we're an microinsurance intermediary operating in 9 countries across mainly East Africa with some reach in West Africa. So some countries include Kenya, Nigeria, more recently Mali and Senegal, as well as Tanzania, Uganda, Burundi, and so on. So we insure at a yearly renewal around 800,000 farmers across these 9 countries, and we work with 14 partners and 9 insurers and reinsurers. Collectively, we've made several $1 million worth of payouts for farmers for microinsurance risks. So just the briefing over some of the products that we offer, so you have some insight on the work that we do. The first is a germination cover. So what that means is farmers are registered for insurance, and then as the season progresses during the planting season, in the few weeks that are most critical to the planting and the germination of the plants, if there's not enough rainfall at those locations, at a pixel level across whatever the insured area is, then there will be a payout. And that payout will take the form of a free bag of seed that the insured will be able to pick up at his local agro-dealer shop and try again within the same season, so that the entire season isn't lost when there's a short dry spell. Another product that we offer is called the yield insurance cover. So what that is, it's a more comprehensive multi-peril insurance, but its payouts are based off of an index rather than visiting farms individually, as this decreases operations costs and is more executable. And we're able to then decrease the cost of the cover for the farmers. So what this looks like is farmers are either aggregated or register through other means. And then at the end of the season, during the season, we'll provide reports to the insurers. And at the end of the season, we're able to actually send out hundreds of our own enumerators in the different countries to conduct crop cuts. And then those crop cuts will determine how well different areas have performed. And then based on how well they've performed, there will be a payout or no payout. And the last thing that we offer, and this is a newer thing and still being worked on, is a revenue insurance cover. So it combines the yield cover as well as the new price cover, because it doesn't matter how well you do in terms of the kilograms of crops that you produce in a season if the prices in the market tank. So this is a multiple of your yield multiplied by what the guaranteed price of that crop would be. And if either the price goes down in the market or your yields go down for whatever reason, drought, fire, etc., you're compensated based on the level of the revenue generated over an indexed area, rather than either one of those individually. So more on the topic of the discussion now for climate risk. These are some studies published outside of Pula, because we're currently working on our own study here. We don't have the exact results yet, but some of the things that we've seen with microinsurance is that there's higher investment in crop bred pigs, for instance, for livestock, once you introduce insurance in the mix, because then people are more confidently able to invest in their own farms year to year. Similarly, in Ghana, we've seen that insured farmers increase expenditure on fertilizer by 24%, and the area of land cultivated increased by 17%. And on the Pula side, we are currently working on a study on doing some of this. So don't quote me on this, but some of the tentative results we've seen are also that fertilizer uptake has increased from year to year for our insured farmers, because they're able, especially in areas where there were payouts, because they were able to have a level of trust in the product and be more confident in the crops that they harvest in spite of climate change, because they know they are insured against that. So I have just a quick testimonial from one of our farmers who was insured and got a payout from us. So this farmer, Catherine Bertra, she was a farmer in Malawi, I believe. And we were able to, in the beginning of the season, there was a dry spell, a 4-week dry spell, and none of her crops were able to germinate. So what we did was we provided her a payout, and you can see there on the image to the right, she was able to replant, and she was able to have a very successful season afterwards from the payout. And we think it's farmers like these who are able to spread the word of, the insurance working, to be a natural kind of growth from place to place. Because once the payout does happen, like farmers do talk about that. And then we do see exponential growth, not just from those locations, but for our schemes in those countries in general. So in terms of climate change and building resilience, am I running out of time? So the first thing is that insurance acts as a bridge across poor weather. So as the weather decreases, we need to be able to get those farmers across that bridge. And insurance is just one way to do that. And building insurance structures that allow people to easily come on board onto the insurance scheme, as well as paying out at the right times. Because even if the payouts aren't massive, like another presenter was talking about, they're coming in at the exact right time when the farmer needs those payouts. It's when they've suffered a loss that is exactly when they need that money the most, so they don't liquidize their other assets and are able to keep building their wealth in spite of those events. The next one is good weather then allows them, for all those years with good weather, the price of the insurance has to be low enough such that they're still able to invest. So in the good years, the price is low enough such that they're able to invest in the farm. And in the bad years, they're able to survive it because of the insurance payouts. With a bridge like that, they're able to, instead of going in a vicious cycle of building up your farm and then losing everything when a catastrophic event happens, they're able to build that wealth every year. And lastly, having an automated and seamless insurance policy system, so developing the tech that allows you to register these farmers in bulk, having the contracts with reinsurers, and the agreements with local insurance carriers to be able to renew these policies and keep a stable market is also important to being able to provide this bridge. Collectively, we see this as a way to bridge the gap in climate change, but obviously things need to be adjusted as things develop. So some of the success factors and challenges that we've noticed on our end are, for one thing, being able to produce quick payouts to farmers when they need it most, because there's only a short window of time that those payouts are most critical. Because beyond that window, these farmers need to start paying for things like food. So if you aren't able to get those payouts automated and quickly to them in time, then there's not too much point in it, because at that point they would have liquidated their assets already. And that's something that we wanted to avoid in the first place. Another important success factor in being able to register and insure so many farmers is effective operational execution. So if you're not conducting your crop cuts effectively and efficiently, then the cost of the product balloons. And if you're not able to execute these contracts on time, the insurance becomes null. Because reinsurance carriers, there's too much moral hazard in the risk. And finally, being able to conduct farmer engagement, so preventing the risk to begin with, giving these farmers access to agronomic tips that they would not have access to otherwise, like when to apply fertilizer, how much to apply, for what crop, when. Being able to push all of this information to farmers actively is another way to prevent loss moving forward. But there's also a lot of challenges that we've been facing. One of those is data availability and the difficulty in collecting it as well as processing it. So the systems that we've made to collect that data have been tweaked such that we don't need to clean it too much at this point, because 90% of data analysis is just cleaning the data. So we wanted to make sure that that wasn't the case. As well, to being able to collect this data in the 9 countries that we operate. Being able to manage the operations teams, which I don't do. Keely Gold does that, and she's really done an excellent job managing all of that. Another challenge that we've had is to get consistent government support for these policies. So in most developed countries, the government supports their agricultural insurance programs because, for a reason. And being able to get that government support for the countries that we operate in has been not the easiest. But if we're able to get a firm policy in place in each of these countries, we anticipate the industry being able to get a lot more stable and growing much more quickly. And finally, different technical challenges for each market. So obviously, as we expand into more lines of crops and more countries, we see new challenges that we'd never considered before. That's everything I had. Thank you.
Thanks very much, Victor. It's good to see really that some of the success factors really are focusing on the customers that you're trying to serve, and that you have plans in place to overcome some of your challenges. So let's see. Shola, I'd like to hand over to you to give some of the perspective, a reinsurer's perspective from Continental Re. Thanks. No, so you'll see it. I think we have the French.
Oh, okay. Can see. All right. Okay.
There we go.
Thanks. Good morning, all. My name is Shola Jibade. I work with Continental Re in Nigeria. Continental Re is a Pan-African reinsurer. We have 6 offices across the continent. We believe that Africa is our home, it's our base, and African premiums should be retained in Africa. And therefore, everything that we do, we try as much as possible to be Africa in nature. We have the head offices in Nigeria over 30 years ago. And in 2012, we established the subsidiary in Nairobi, Kenya, to take care of the eastern operations. In 2014, we were in Botswana. We tried to cover the South Africa market from Botswana. Again, last year, 2018, we tried to have an office in Abidjan, as Ivory Coast. We call it Continental French Africa. And Lagos now house the Anglophone operations, of which I'm the head. So I lead the team for Anglophone operations, which is Nigeria, Ghana, Sierra Leone, Gambia, and Liberia. I'm going to be talking about risk protection gap this morning, and I actually wanted to focus on flood as just one of the protections that we have. I'm just going to introduce it a little bit, and then try to see what we have in the last 10 years, and also talk about Continental and our initiatives with Principle for Sustainable Insurance, the way forward for us, and then I'll conclude. Okay, I just kind of give this introduction that risk protection gap is the difference between the insurance cover that we have, that is insured, that is economically beneficial to have, the cover in place, should a loss event occur. What we have seen is that a large proportion of our developing country populations, especially the lower income groups, they are not protected. They are currently underinsured, leaving them squarely in the risk protection gap, and therefore they are financially vulnerable. Furthermore, as this insured losses event materializes, the resources available to cater for this is really is not enough, it's not adequate. So that protection continues to widen. We see that compounding this is the challenge that the growing environmental changes, such as the climatic change, that we are going to make this potential loss, of this kind of people really leave them unprotected. And we are seeing that in this form of this frequent, where we're having these storms, these floods everywhere, wildfires everywhere. So the financial loss incurred and those that are insured to build these financial resources from the scratch is often calling on the help of the constrained states, and that's our government, thus setting back the investment in our continent. I just give an example here, what happened in 2011 in Nigeria, in a province in Nigeria. It's called Ibadan. There's a dam in that state that overflows. When this happened, this is a result of it. About the death that is recorded, it's about 120 people that died, including women and children. I don't know why we left the men. But we focus more on the women and the children. So this is it covers so much areas that it's difficult for even the government themselves. The estimation in terms of reconstruction that's supposed to take place in that state at that time was costing about $125 million. And the state, that's the province, categorically came out to say, we cannot afford this. So they needed help, they needed donation. This is some side part of just a pictorial presentation of what's happened there. You can see it's a rain. Like I said, it's in one of the states in Nigeria. Again, that's 7 years after, that was last year, the same time, in Lagos, this is what we've got. Same way, affecting households, covering area communities that are affected by this. So it needed an action. It needed a call for an action from the reinsurer to ensure that we were able to do all this. So that's the problem that we have, and that's what we have to deal with. And that's what Continental, we're taking initiative. Lately, this year, we have this cyclone. Everybody's aware because it's around this area, in the southern area, covering about 5 countries, Mozambique, Zimbabwe, Malawi, and all that. Yesterday, we learned that the estimation that was put forward is about $2 billion for it. And then for Mozambique alone, it's around $750 million to about $1 billion. Mozambique can definitely not, so they were waiting for the aid. As at the last count, I'm not too sure, not factual, the aid that's coming to Mozambique is around just $25 million. So I don't know. So it calls for action, a collective action on the part of risk bearers to breed that resilience. I just took a little picture of what is happening. I'm sure that you've seen them, just to restate them. At Continental, how we're involved. In 2012, Continental is the first reinsurer, apart from South Africa, to sign into the Principle for Sustainable, the United Nations Principle for Sustainable Insurance, which, of course, deals with the climatic conditions and disasters. So at that, we are trying to build the capacity. We are trying to see what we can do, as a reinsurer, and also working together with our colleagues in the continent to see what we can do. So we signed that contract, and the first edition of that contract, of that convention that we signed, is that as a risk manager, we have the first edition of it took place last year in South Africa here, and at that, there's a concerted effort to make sure that we are able to put together an action plan to see what we can do. Our group managing director, Dr. Femi Oyetunji, at the second edition of it, we actually had it in April, that's 2 months ago, in Lagos. He said this, that as a risk manager, insurers and investors and the insurance industry has an important role to play in making communities and economic inclusive, resilient, and sustainable. That was his word. And he mentioned that the recent devastation that we have, and he's quoting the cyclone in Mozambique, and which is the Idai, and then the Kenneth, as was saying, yet another one. It's a wake-up call for us that we cannot just sit down again. We need to do something about flooding. And he said, we need, as a reinsurer, to ensure that we are able to do something for the continent. So we have this action plan, or we call it a working group, that took place in April this year. And there we kind of agree on some things to do, which is leading me to this next stage, which is the next thing. And he said that we need to recognize the importance of government, because whenever this thing happens, it's the government that we call upon. But again, the resources is limited. I'll give an example. I think April this year again, there's another flood in Ghana. The World Bank came into the picture. It was donating about $200 million. Definitely, that is also not enough. $200 million, it cannot do anything that side. But it's something. But it's government that is coming. More again, the various disaster management agencies that are created by government, even in most of our African countries, they were actually just working like in silos. They are not able to put together a nation. So we are at Lagos conference, we agreed that we needed to get into each country's resilient officers for that state, or for that province, or for that country. And we needed to get together. Again, we also said that at that meeting that we needed to get a reinsurer, about 5 of us that are prominent in the continent, and also big companies like insurance companies that are also prominent, playing active role in risk mitigation in the continent as well, to form a working group, and then to start to work with Africa risk capacity as well, in order to get what we call this risk model thing, the flood model, and then the catastrophe model again, so that we can be able to say, okay, if we have the statistics, if we have the data, right now the data is not also there, but I know that they're working, my colleagues there will talk about it. They're working on it. If we are able to get those things right first, let's get the flood map, let's get the catastrophe model, and then let's start to work together. So on our part, at the Lagos meeting again, we said, Nigeria, we will get a champion. Ghana, we'll get, all over Africa we'll go. And then we'll get a champion for each of these officers There will be a coordinating unit. So we start to work from the community level in each of the countries, in each of the provinces, and then come together again. And that's what we're doing. And that was the action plan that was there, like I said, in Lagos. So right now we are ready, but it's a bit on the consultation, right? Because it's like we said, from 2018, it's a wake-up call. And then we're just trying to do consultation, and then we're trying to do meetings, and the end of it, working with them as well. Then we think we should be able to come up with a product that will be able to cater for disasters, in Africa as a continent. So, like I said, we're looking at the continent as a whole. Again, when we're talking to the world, when we're talking to the United Nations, we wanted to put a voice and say, yes, this is Africa. This is Africa's experience, and this is what we're doing. So we need to help ourselves first. Before, we don't want them to come and tell us what to do, that we know what to do here, even in Africa. I think that is it. So thank you. I think I just said it.
Thanks, Shola. So it's really good to hear that there's a multi-country initiative with various insurers that are looking at how Africa can support its own needs in terms of disaster resilience. And also you've mentioned the importance of liaising with governments and local governments. Maybe, Kip, you can tell us a little bit about how Africa Risk Capacity approaches working with governments in this area. Thanks.
Thanks, Janice, and thanks, Shola, for the brief introduction as well. My name is Kip Koske. I work for the African Risk Capacity. African Risk Capacity, or ARC, as has been mentioned, is a specialized agency of the African Union. It was created in 2012 with the main aim of helping African governments mitigate the effects of natural disasters. It was at that time, or as it's currently happening, as you can see, African governments are faced with a lot of constraints in terms of how to mitigate the financial effects of these disasters. And as a result of that, African Risk Capacity was created, and it created its first affiliate, the African Risk Capacity Insurance Company Limited. The insurance company has been in operation since 2014. We have been really active on the African continent, having 33 countries as signatories to the treaty that established ARC. As part of that, we have developed tools to ensure against drought. It was quite important to kind of note from the discussions yesterday from the regulators, at least in Morocco and in South Africa, that they were mentioning that there's a problem with modeling drought. That aspect and that tool that we've developed is available, and we can share across the continent and across share experiences on what we've learned across the continent. So ARC has had at least 5 risk pools, I forget. So we're going into our 6th risk pool. When I say a risk pool, it means that we've been able to collate risk from across the continent. So we've had participation from at the sovereign level, from the Senegalese government to the Malawi government, and collate that risk into one risk pool and reinsure that risk. That makes it more efficient and cheaper in the long run for governments to sort of manage that risk. Importantly, ARC is sort of embarking on a new sort of strategy. So the strategy is focusing on what we call development insurance. So we're looking to link all the parts of ARC that it is to creating the public goods angle. So looking at creating the early warning tools that we have. So the drought tool that we've mentioned, we're developing a flood model that we're currently testing in West Africa. We also have, as a requirement of taking out insurance, each government has to have a contingency plan. So the contingency plan is a prerequisite for taking out insurance. So that linking an insurance or financial protection through a contingency plan should help mitigate the effects of a drought or of a natural disaster going forward. So having that contingency plan is going to be key. And also, lastly, having the tools in place, the financial tools for risk transfer. So that whole spectrum of tools available is quite key, and it's going to be the new sort of way of thinking of the insurance, and having it open and an inclusive sort of environment to have both the industry, the governments, and the private sector involved in creating this public goods for the advancement and especially for the bridging of the protection gap. So that's a brief introduction of what we do.
Thank you. So even though it's difficult to work with governments, I think sometimes, with persistence,
Yes.
it can really make a big difference to the population. I know you had a question for the panelists.
Yeah.
So maybe you can pose that now.
Yeah. I want to thank the panelists, and I think the presentations were needy and right timely in terms of what we're looking to do here. And the focus of the panel and the focus of this whole discussion is how we bridge the protection gap. And that bridging, I think, is quite a bit the important thing. And I think from the presentation from Victor and Shola have sort of shown that the parametric sort of index insurance is the way to get the last mile person sort of insured or get some financial inclusion and tools available to them. A key tenet or key issue that we as industry, we as players in this space feel is there's a lot of there's incidences of basis risk that's faced in the industry. I was just wondering if to elucidate or to provide more context in terms of the basis risk and how you want to, or how the different elements can be managed within the different products that are on offer to actually make sure that they're best fit for the end user.
Right. Perfect.
I want to take it.
So in terms of basis risk, so that everyone's on the same page here, in terms of our products, what that mainly looks like is for the weather index, for it to not catch. Sometimes the satellites are wrong, and there actually isn't too much rainfall on a particular spot. And in terms of the yield index, what that looks like is when you collect samples for a representative area, some people might be below that average, some people might be above. And then if that index is good overall for that area, the people who are below that index won't get a payout. So in the context of our products, that's what it looks like. And how we mitigate that is in terms of, some examples are for the weather side, we have, using various technological solutions, we identify which areas post-season have had that basis risk, and we try to mitigate that by sending people and like giving payouts to those people ex gratia. And for the area yield side, what we try to do, we developed an algorithm to get more homogeneous zones. So rather than insuring at like a government boundary level, so a province or a state or an LGA, we developed our own zoning such that those areas are much more homogeneous and people perform similarly to one another than the government areas would be. So those are two ways that we've done to decrease basis risk in our products.
Thanks, Victor. Shola, I don't know if this is a problem that you've experienced as a reinsurer.
Well, we work with Pula. We started working with them again on the area yield and also on the index, which is the new product that's being developed to cater for the agri side. The experience is not much because we just started. Okay. And then, so we have not actually measured the impact of, the baseline of these products. But one thing that is sure is that the federal government of Nigeria actually floated a statutory body that is called NISA. That is the one that is actually responsible for, they give loans to small farmers, and then it's coordinated by the insurance company, a specialist insurance company that is set up for that purpose, which is called the Nigeria Agricultural Insurance Corporation, mainly for agri. So the Reserve Bank loans to these smallhold farmers, put them together, and then the insurance part of the back side of it is that then it's coming into reinsurance, and then us, Africa Re, and then some other reinsurers are on that program just to make sure that we give the reinsurance protection at on the other side of it, event.
So you'll be gathering experience over time. That's great. So Eric, I know you're very passionate about making sure that the low-income market is covered for disaster risks. So, and you've also got a question that you want to pose to the panelists. So Eric will be speaking in French.
Okay. Thank you, Yanis. Thank you, Janice.
Okay, merci. Merci beaucoup.
Thank you very much. Thank you for this opportunity that you're granting me. I have this opportunity to participate in this important debate, which focuses on African peoples. Can all English delegates hear the interpreter? All right. It seems that there are some technical issues with some earphones. Can Janice hear the interpreter? Channel 1 in English. Can Janice hear the interpreter? Channel 1. Channel 1. Channel 1 English. Can Janice hear the interpreter now? All right.
We're just waiting for Sholo.
Can Mr. Shola hear the interpreter on channel 1? Can Mr. Shola hear the interpreter? All right. Thank you very much. I was saying thank you very much for this opportunity that you gave me to participate in this important debate, whose primary purpose is to help our population in getting better used to their environment and get back on their feet once they are victims of natural catastrophes. I'm extremely happy to see that we have a Pan-African reinsurer in the panel who has been at the forefront of index insurance on our continent. And so the question that I would like to ask is, given the fact that most concerns are pretty much the same, that is, in most of our countries, don't you think it would be more interesting to have initiatives that would incorporate many states so as to pull together the risks, but also to reduce the costs?
Sorry.
All right, testing now for Mr. Shola. Can Mr. Shola hear the interpreter? All right, so Janice will translate. So I was saying that.
Okay.
Can Mr. Shola hear the interpreter now? All right. So as I was saying, I wanted to find out if the initiatives that are taken to identify, to quantify, or to establish the cost of index insurance products, don't you think it would be more interesting to integrate or to ensure that many states work hand in hand in order to pull together the risks, but at the same time to reduce the costs that are included in the implementation? Because we have, for example, a company that has put in place a project in one of the northern regions of Cameroon, but when you look at the features of those regions, they are pretty much the same as the features that are found in other regions in Chad. And so the work that is done in Cameroon is the same work that is going to be done in Chad, whereas the same thing could have been done in both countries by one company and by all states pulling together the resources. So we are extremely lucky to have one African reinsurer, but the issue would be to try and see how we can collectively address the concern, address the issue, so as to work hand in hand in one particular area. Thank you.
Thanks very much, Eric. So mainly the main question is really how can we consider a multi-country or a regional perspective in terms of insuring risk, and is that going to be more efficient and create a better risk pool? So I'm going to let the reinsurer give some comments. We'll also, I think, ARC can give some comments on their experiences, and we'll consider whether intermediaries have a role to play as well. I'll let you show.
Yeah, I think that is one of the things I mentioned in the presentation, that as the momentum's getting going on, the intention is to have one voice as South Africa in tackling this. And I said that we're going to be working with African risk capacity. Fortunately for us, and that was a vision for Continental Re, and that's why we kind of said, we are going to have offices in the 6 geopolitical zones. I mean, in terms of Africa, that's the way that we do it. And it's a group company where whatever that we have, we apply in every area, whether in Botswana for the South Africa market, or for the Botswana office, which is South Africa, the one in the Eastern Africa, which is our subsidiary in Nairobi, or the Lagos one, or the French Africa. So, like I said, it's an African perspective, and that's the basis of Continental going into this. That locally communities, we need to study them, and we need to start from the local level, and then we now consolidated them into one policy, into one strategy. And the next step that we are moving into now is that I was having a discussion this morning. What we wanted to do, we also tried to co-opt other Africa reinsurers and insurers as well. And what we do is that we're going to get a local champion like Nigeria, where Continental Re is prominently. And when we get to Ghana, we will get the Ghana Re. When we get to East Africa, we will get Kenya Re. When we get to South Africa, we will get a company like Santam, who is also very global in nature. So we're going to be having a meeting together. And then the solutions that we're going to be offering is going to be a consolidated product that will cut across the continent. Because whatever that is happening, as you said, in Chad or in Cameroon, is possibly going to happen everywhere. Disaster is the same. It cuts across, and the damage is devastating. So we're having one solution, and that's where we're moving to now. And then we're working on that. And so we will have what you have in mind, in the nearest future.
Yeah. Do you want to talk about the portfolios in a little bit more detail?
Yeah, and I think the question is quite timely as well, given that, as he mentions, the aspect of pulling together risk and doing things as a group makes economic sense, and it actually is the way that the world is moving and the way that Africa should be moving. But even before we get to the insurance stage, I think we need to take a step back. What Victor mentioned in his presentation, some of the constraints in terms of the data, the technology, where we are as a continent, I think it's time for us to kind of come together, analyze this risk as a collective, and it'll be much cheaper, much more efficient, and it'll be a more unified way of approaching this issue that we face. But so as the project you mentioned is happening in Central Africa, it's something that I'm sure is being replicated in West, East, and Southern Africa. It only makes sense that we, as a collective, come together and through forums like this, identify these initiatives, see how we can build synergies from these initiatives and actually take this forward. Because the problem is there, and the solutions are happening, but they're happening in I think, a fragmented sort of way. So the best way is to work together and actually address these issues as they come. In the practical sense on the insurance side, and what we've actually managed to do in terms of pulling the risk, as I mentioned, we've done 5 risk pools over the past, since 2014. We've managed to transfer $500 million worth of drought risk, $500 million worth of drought risk to the international reinsurance market. We hope now to start working with Continental Re to be part of that reinsurance panel. But importantly as well, we've managed to kind of get buy-in from countries to understand and to be able to take a more proactive approach to risk management, which I think has been quite a game changer in the way governments have been working and governments have been thinking about managing risk. But also it's a continuous process. So ARC, as the way it's sort of set up, is looking to partner with as many people on the continent as possible. So, for example, at the end of the month, with the help of the Senegalese government, we have a joint training that's happening with the World Bank Group and the UNECA to bringing together both private sector and public sector to understand index insurance, to understand its benefits and, importantly, its limitations. So this pulling together, it's from an insurance perspective, can be done both from the financial product as well, but across the board, from product design to actually education-wise as well. So it's something that we're constantly working on, and we're looking for partnerships to actually bring that forward as well.
Thanks, Kip. So, Victor, is there a role for the intermediary?
I think Shola and Kip got it pretty well.
Okay, so so I think it's very important because these are large-scale problems and affect most countries at some time or another to take the approach of looking at the continent as a whole and sub-regions to really work together to leverage resources is a good thing. I'm going to open the floor now to questions. So please, you can also address, so Eric's from the regulatory authority in Cameroon, so we still have a regulator's perspective on the panel. And then we have the 3 industry players. So you're welcome to address questions to any one of the panel members. Thanks. Okay, so we have a question from Kingsley. And then from Ivory Coast. So Kingsley will speak English, but the next person is French.
It's French.
Yeah, the one after Kingsley will be French.
Good morning, everyone.
Okay.
I'm Kingsley from Ghana. My question is this. One of the major challenges that we have on the continent is that when it comes to planning, we have very good plans. Implementation becomes a major challenge. First, what are the timelines that Continental Re has set itself in terms of engaging the other stakeholders to ensure that this project starts? And then secondly, how sustainable, what are the plans for sustainability of the project going forward?
Okay. We have the time frame that we have. Like I said, everything is just taking momentum. I said that last year in Johannesburg here, the Principle for Sustainable Insurance workshop was held, and that was the starting point. And then we said this year we were in Lagos, and then some action plans, were agreed, to go. This action plan, including liaising with government, getting all the resilient officers across the continent. Each country, we need to get in touch with them. So there's a plan to reach out to them, to bring them into these working groups. And of course, I mentioned that African risk capacity is part of the agencies that we needed to get in touch with. Also, right now, AIO is also doing some flood modeling. Most of the problems that we have is people are just working in silos. Our aim, our vision is to bring everybody together and have one disaster strategy that we'll be able to implement, that will be sustainable, and then that will be able to cater for Africa. And we will be able to get all this, as we said yesterday, about public-private partnership, involving the government, involving the regulator, the players as well, and even the community themselves that are involved, that are going to feel the impact of this. We can't leave them out in the planning. So this year, we've set up the action plans that we want to cover in phases. By the end of this year, we'll be able to come up with, how we are going to approach it. And like I said this morning again, I was discussing there's a need to have another workshop that will bring together, just to see how far that we've been going. So we don't have a long plan, but it's like 5 years, but then we're starting this year, and the momentum is going on. So the idea is to make sure that as we start, that it's sustainable and it's focused on what this risk, how to mitigate it, and how to get the players and those people who are actually involved in this climatic disaster and all that, how to get ourselves involved in it, and how to make sure that all of us are, on a go and facing it together as one. So to answer your question, yes, there's a plan, and that plan is a 5 years. But this year especially, we want to move as faster as we can to ensure that at least we get everyone that is involved, that we think that is involved, to think together to what we are not to be working, in isolation and in silos. So I think that yes, we have. Thank you.
Thanks, Shola. Yeah, Coach.
You'll need your headsets.
Okay. Bonjour, mesdames et messieurs.
Good morning, ladies and gentlemen. My name is Kwaku Ban from the Regulatory Authority of Côte d'Ivoire. Since we're talking about a number of initiatives, I would like to highlight the case of Côte d'Ivoire, which has 2 initiatives at this moment. We have, firstly, the African risk capacity, and it is based on the choice of a reference culture. We also have a second initiative, which is the World Bank initiative through its Give Local Index Insurance Facility. And in this initiative, we have 2 companies that were chosen and that have been set up to focus on 2 different cultures. So now, my question is the following, and it is addressed to Mr. Wang, who presented the Kenya experience. And I would like to find out how does it happen? Are there cultures that are chosen, or how does it take place? And this is compared to the 2 initiatives that I just spoke about. The second thing I wanted to ask, this question is addressed to the representative of the African risk capacity. For West African countries, I believe they already had payments payments made, and I would like to find out if there is a mechanism that exists and that ensures that farmers have been indeed paid. Thank you.
Thank you.
Okay. Cool. So I'll go first. In terms of your question on how does this happen, I'm going to assume that means how is the product created and the insurance implemented. So to answer that, we actually do have some projects coming up in Côte d'Ivoire in the next season for some crops there. In terms of how we do it right now, for each of our clients, it's more of a custom solution. So we don't have a off-the-shelf product quite yet for each of the crops or each of the countries. So we talk with the stakeholders, so the aggregators or the persons looking for the insurance. We talk to the farmers to understand how the coverage can be tailored to their risks. And then we talk to the regulator to figure out how we can get this instated. So there's no go-to how to get coverage set up. It all depends on which market it is and specifically the specific needs of the farmer. I don't know if that helps.
On the question of the payouts and how we actually check that the payouts have actually reached the intended beneficiaries, I think it's a very good question, and I think it brings to fore what the contingency plan is. So when the government takes out insurance with ARC, the contingency plan is not a plan which is just going to be put on the shelf and wait there for eternity. It's something that we actually look for as an action template of what actually is supposed to happen when a payout actually gets done. We've had, as you've mentioned, we've had payouts of $36 million since inception, and to that, each country has to report to member states on what activities they've done with that money when it goes down to the ground, and this report is also verified by third-party agents that we have on the ground, such as your big four audit companies are involved in that process. So, and the report is published online as well. Importantly, and to the tenets of ARC was set up to ensure that there is quick and timely payouts to the countries and to the beneficiaries and the end user. So our funds have to be used up within the first 6 months of a disaster. So this implementation plan is further validated through these checks that we have, that they have to come back to report to each other at our governing board, which is the conference of the parties. So for example, the last payout we did to Mauritania gave a report to the rest of the countries on how they use the funds to sort of mitigate the effects of the drought. And in terms of what's usually done for the payouts that we've provided, look for providing fodder for cows, cash transfers in a lot of the cases, and also for food supplies to people in the local region. So that information is available online, and again, it's something that we're looking to build out and grow and see how we can actually improve on that process.
Thanks, Kip. And then Camden.
Yes, thank you to giving me the floor. Oui, moi c'est Camden Raoul.
My name is Camden Raoul from the Cameroonian Insurance Regulatory Authority, and my question is addressed to Mr. Kim Koris-Oske from the ARC. And I would simply like to find out if the African risk capacity is the same as the African Trade Insurance Agency, because it seems like African states set up an agency for trade insurance in Africa, and it is called the African Trade Insurance Agency, and I'd like to find out if it is the same as the African risk capacity. If it is not the case, I'd like to find out what indeed is the relationship between those two structures. Are they competitive? Are they complementary? When it comes to covering Nat Cat insurance, do they address the issues together or separately? And finally, I would like to find out if those two agencies, if they work separately, how can they work together? So these are the questions that I would like to ask Mr. Kolaski. Sorry for mispronouncing the name.
I'll kick it off. Thank you for the question. In terms of ATI and ARC, they're completely different entities. The risk cover that's offered are relatively different. I think ATI mostly focus on political risk around trade, whereas ARC is specifically mandated to look at natural disasters and the risks around that. It is true, and it's something that we should be looking at, working together with ATI, Africa Re, and all the players out there to actually have a united front to manage or to look at the African continent as one and see the synergies that we can actually get from working together. So that's thank you for that point. I think we'll take it forward. I think we'll start building our relationship with ATI. We have quite an active relationship with Africa Re already as part of the reinsurance panel.
Eric, do you want to add?
Merci. Je voulais compléter.
Thank you. I'd like to highlight the objectives of the two agencies. ARC is mostly focused on Nat Cat insurance or Nat Cat risk, whereas the ATI, as the name suggests, is focused on facilitating investments in our countries. And these investments will be covered by these insurance, what I'm trying to say is that ATA is almost positioning itself as a guarantee company for states in order to attract investments in the countries. And yes, it is true that the two agencies work with government, but ARC is mostly an agency that provides insurance solutions, whereas ATI allows the foreign investor not to worry about the outcome of their investments because ATI will be a guarantee. And so it is to attract investments in our countries, and it is a way to increase the amount of investments, the amount of foreign investments in our countries. Thank you.
Thanks, Eric. So I think we can take maybe two more questions. So Fangman, and then at the front. Okay, I'll three. So Fangman, then at the front, and then at the side. Thanks.
Fangman from SIMA. I don't know if my comment is just a comment or a question, but my parents are peasants. They have got a farm, and I can see that and I've got some cousins in the village. Due to the progressive decrease of the rainfalls, they don't get what they want when they are farming, and each year the yield is decreasing and the production is also decreasing. And we can see a lot of people coming from some other countries, notably from Burkina Faso, from Mali, and coming in Côte d'Ivoire, due to the fact that when they are farming, they are not getting what they were used to get in the past. So there is a progressive decrease due to the rainfall, due to the degradation of the soil. and they don't want to wait until 10 years to see that there is nothing. If the first year you have 10-year decrease, the second year you have 10-year decrease, and you see the trend, you know that if it's still going in this direction, at the end you will not get something. So they don't wait until the end, and they start a migration in some other countries, notably in Côte d'Ivoire. You will have some taking some boats and going to Europe. A lot of are dying in the Mediterranean. And my point is that maybe we should consider the definition on natural catastrophe, because those people who are not able, who are seeing that there is no future in their village, and they don't want to stay until 5 years, 10 years to see that they are not able to live anymore in the village. They are suffering natural catastrophe. I think that they are suffering natural catastrophe. But in our way of analyzing the problem, we are not really taking into account this kind of problem, and some of the political issue we have now in our country, conflict between the population. You have heard. I think that 3 or 4 days ago, some population were killing themselves in Mali. Some of the war we will have in the future will come from this fact, and we are not taking into account this kind of problem. Those kind of problems are not coming suddenly. They are coming progressively in the time, and it's not taken into account. And I want to have your comment on this kind of problem that are not appearing suddenly.
Can we have maybe all 3 questions, and then you can think about that answer. Yeah. Oh, this will be French too.
Merci.
Well, thank you. My name is Namat Nod from the Supervisory Authority of Senegal. I have a comment to make rather than a question, because, of course, Senegal is a pioneer in the natural disaster insurance and the risk of natural disaster. And we have approached the issue from a holistic perspective. I'm very happy to see that Continental Ray and similar entities are showing interest in this type of risk coverage, because traditionally, of course, these are not the main business that such companies would be interested in. Of course, this issue means that when we have these catastrophes or disasters, those insurance companies are those that step in. But we have to use index-based insurance. But this is a very important issue. We being able, regarding the coverage against drought, for example, in the Sahel region, finding solutions enabling insurance to cover these type of risk is very important. And that also means that innovation is very important in the insurance approach to covering the risk of natural disaster. Of course, it's not about engineers going to the field to do some assessments. It's that means that it's welcome. This initiative is welcome. And through ATI, we have an institution that has positioned itself at the macro level, especially since the resources required to cover such risk in Africa are not necessarily available, and it's very important to have partners. That collaboration between the insurance side of things that insurance companies have put in place in terms of solutions, and what the state will, of course, do. That, of course, we all know that the populations affected do not have the resources to protect themselves. So, of course, the state must contribute and join efforts with the private sector to provide solutions. I think these initiatives, this type of initiative, should be encouraged, and ARC should serve as a model to inspire other companies to do the same. And the private sector has a lot of skills, they have a lot of resources, and they can help us. And as it was mentioned, ARC is ready to work with other companies in order to ensure that these issues regarding the coverage of risk for risk of natural disaster is, of course, dealt with and provides the solutions that African populations need. Thank you for your attention.
This will be English.
Okay, thank you. My name is Balai. I'm from the National Bank of Ethiopia, which is the country's insurance business regulator. I have 3 questions. The first one is, we have been trying to address climate-related problems through private insurance solutions, like what Polar advisors are in, as far as my knowledge is concerned. They are working with private insurance companies so that the solution can be provided by bringing public-private partnership. On the other hand, at the macro level, governments try to address disaster-related problems by setting up African risk capacity. So, in both cases, even at the private level, from the experience I have, government is expected to provide, at least for the initial years, to provide premium subsidy. On the other side, for African risk capacity at macro level, it is still the government who is required to provide the finance. So unless we can bring together large number of players and large number of countries to make the contributions, can it be affordable for countries, for states, to pay for the premiums and also to support people at times of large-scale climatic shocks? My other point is, if I am not mistaken, I have heard that the Nigerian government has set up an agricultural insurance corporation. So the central bank provided the fund, which means the government gave the capital to the company. Unless the household farmers are paying the premiums, it is still the government that is going to pay at times of shock. So can we sustain this solution by making the government the key player and the key financer? Because most of our countries, they have to look for the World Bank or for other countries to support us at times of natural disaster. Thank you.
And there was one question on the side.
Thank you very much. My name is Denchi. I'm from Ghana. My question is in two forms. And the first one goes to Victor. I wanted to find out in like crop insurance, or let's say agri insurance. I wanted to know whether the insurance cover that is given, there is some government subsidy or the government intervention in payment of premium so as to make it such a way that you can get the large numbers that insurance actually drives on. So that's what I want to know for both crop and then for livestock, if there is any insurance to that effect. And then my second question goes to, let me say, the three other panels, because it has to do with catastrophic losses, that's cat losses, because these ones are very prevalent across the continent. That's the African continent, let me put it that way. And usually the amount of losses involved are quite huge. I wanted to find out whether there is no other way, that's besides the collaboration that we've spoken about, like there could be something like a tax on, let's say, water, electricity, which the large numbers consume. Before that, apart from that intervention, the issue about insurances comes in so that payment of premium become less so as to bridge the gap, and then we get the large numbers coming in. So these are the two questions that I have.
Thanks very much. So I'm going to ask the panel, so who wants to take the question on persistently low yields over a long period of time, but not a huge natural disaster, how to cope with those areas? I'm not sure.
I'm not sure I got the question.
So for farmers who find that their yields are lower persistently due to drought or maybe poor soil, but not dealing with the huge floods and maybe very severe droughts that would be in extreme events, how to deal with those persistently lower than expected situations. I don't know, Victor, if you've got any experience.
Sure. Yep. So that has more to do with soil depletion. That's not necessarily an insurable risk because that's not like an event per se, but more of a long-term trend that you've seen in many countries. That's more what agricultural departments are looking for, how to renew the nutrient contents in soil. So that's more of a long-term government and agricultural solution rather than something that insurance directly tackles, at least right now.
Do you think your fertilizer packages are helping to support that?
Well, I know the fertilizer companies we work with, like this is something that is top of mind for them. But I don't know any large-scale solutions that are being implemented across countries to being able to resolve that issue. But I know it is something that is talked about.
Thanks.
I think the question requires for us to kind of take a step back because we're having this discussion on climate change and the effects of it at the disaster sort of level. If we look at it, as speaking to our colleague earlier this morning, as we know these issues are happening and happening. It's sort of slow onset, but it's happening at the rural levels, and people are migrating to urban centers because, again, one aspect is soil. The seasons are changing. The climatic conditions are evolving over time. So if we take a step back and look at it from a bigger or a elevated sort of perspective and say, what are we doing to actually mitigate the effects of it? We need, insurance is not going to be the answer for it, and it's not going to be the be-all and end-all to make this work. I think that requires large-scale sort of investments in adaptation management and how to change public policy towards not looking at disasters as a surprise, but looking at proactive risk management and proactive adaptation measures, both from the public and the private sector. So I'd mention one aspect that we're looking at in African risk capacity, where we're developing a multi-index sort of parametric product, where we're looking to develop a catastrophe bond, sort of that tracks changes in not weather, but climatic conditions. So we can draw in private sector capital and try and use as minimum public sector money to kind of draw in that. So looking at it from not the disasters happening now, but from a long-term view in terms of what's the situation going to be in 5, 10, 15, and even 50 years from now. I think, as the gentleman noted, there was an index on peace that came out this morning. Overall, the world is a more peaceful place right now, but the effects of climate are becoming more and more pronounced, and that's going to be something that governments would need to look at, and as a society we need to look at in a broader kind of perspective.
And Shola, if you can talk maybe about the premium subsidies and government financing, since Nigeria has some experience.
Yes, correct. I just wanted to take off from where Kip is talking about. I think that we needed to have a strategy, like we said. Insurance is just the end of this stuff. We are presented with situations, these disasters, these catastrophes, and then we found out that there is no one reinsurer or insurer that can take care of it. When this disaster happened, we know what happened. It's not only about your houses that's been destroyed, lives are lost. Even those ones that survive, sometimes you have the heartbreak of, these are some of the issues that for insurance, these are some of the exposures that we needed to measure, we needed to know. And the first step to us in Continental is that we wanted to, and we did that, the report is not out. We needed to study those maps, how can we deal with these exposures that we are faced with. And we know that when they come in such, this catastrophe in terms of how to mitigate. So it's going to deal with construction, reconstruction, it needs to deal with, so we will focus first on the risk management aspect before we talk about the insurance. So that's the beauty of it. If we have identified an area, for example, in Lagos, for example, in Ghana, in Accra, it happens. We know these areas. We needed to know and to measure this exposure that if this thing happens from this area, who are these people? What are they going to lose? How can we quantify this? So we need the study of that. We need to be very sure about that. Then when we finish that, the identification, then we now talk about what can we do? Who is going to help us? From all these agencies and the private, the public, even the insurance people, the regulators. So what are they bringing on the table? We need to synergize, and we need to have a broad strategy that will be able to take care of all these exposures. So we identify the exposure, we measure the exposure, and then we said, no, okay, how do we go? All houses. Is it possible that we insure everybody? How much are you going to be paying? How much is this thing cost? How much is the individual going to put into it? How much is government going to put into it? Which is precisely what is kind of being done, on it. So for me, I believe that we need that global strategy, and we need to concentrate more on risk management first. And you can't do risk management without identifying those areas, which is the map, then we construct the models for it. And that's why we are aiming to. So to that extent, I think that we'll be able to go further. On the extent of the insurance, the insurance company in Nigeria that is focused mainly on agriculture, I would say that the company has been there. It's not just created. The company has been in Nigeria for a long time. It's just that they veer away from, the original plan that they have to concentrate on agri insurance, veer into other non-life, non-marine, and other stuff. But now they are coming back with the support of the Reserve Bank, which is our central bank, trying to put some money into what we call agri when things happen like this. And we're working with Pula again, and it ensures that the premiums for that, for each of those farmers, they put them together, like 5,000 of them or 10,000 of them, and then they give them this money. And then there is an what we call the extension services that are supporting this initiative. Not only that they plan, but there's some people that will be there with them. The overall premium, if I can confirm to you, is about 50%. The government will pay between that 50% of what the actual premium. So the farmers actually pay like half. Half of it is coming from the government of all these farms because they have the records. So they gave them this money. So there is a subsidy. And that's the way that I operate. But on a global level, when we finish with all the plans that we're talking about, we should be able to insure everyone in that community. And there should be a subsidy from the government that will subsidize, okay, how much is the cost? What are you going to lose? So why are we going to do this? So there will be a subsidy. It is part of that strategy. We put them together, and then we now begin to say, what is the action plan on this? I think that's the stake on
Thanks,
that.
Shola. So, Kip, can I ask you, so we have to be very brief because we're using up our tea times. Do you want to take the last question very briefly?
The last question on the innovation or the... I'll kind of start off with that, but end up with the innovation. So in terms of the financing costs, yeah, you're right. Governments are overburdened. We're putting a lot of pressure on them to fork out premiums, both for themselves and for the vulnerable people in the community. I think that's where the idea of the development insurance comes in. So essentially providing this, providing tools, providing the necessary environment for actually insurance to sort of, to filter into becoming something more valuable. And I think I'd like to thank the gentleman for bringing out the idea of innovation and experimenting and coming up with new tools. And I think what's sort of missing, and just to be very short, I know we're overrunning, but what's sort of missing, and I think from the insurance perspective, is we need to be seen to be fit for purpose for the end user to actually derive that value. So I think hopefully with all this innovation that you're seeing here and what we've seen throughout the week, I think it's coming. I hope the eureka moment for insurance actually happens sooner rather than later, so actually we can see some burden being taken off the government and people actually start seeing some value out of insurance. So for that,
thanks very much, Kip. And thanks to all the panelists. It's been a very fruitful, I think, discussion. And I think, well, I don't know if it's a good thing or a bad thing, but in some ways we've posed more questions than answers. So I hope that you will take all of these ideas and thoughts back with you and discuss them further. But I think it's really important to bear in mind that we really need to start working together and stop taking such a fragmented approach. And it's not just between industry, governments, and the regulators. It's also across countries where we can work together to gather data, come up with more efficient processes and programs. And the other thing to bear in mind also is that insurance is not the solution to all the problems of climate change. And there are really many other risk mitigation techniques that need to be taken so that people can prevent or at least mitigate the effects of large disasters and also prepare themselves when things do go wrong. So thank you very much. And it's going to be tea time. So I'll hand over to Dunya to let you know what we're doing for tea. We can wait.
Thank you. You go? Wait. Okay.
Right. Let me just hook this. First of all, thank you all the panelists for this great discussion, and thank you for your questions from the audience. It's been an unusually lively panel. I have three things before we let you go for coffee break. So the coffee will be served once you have submitted your evaluation forms. It's what we really need, and I would like to remind you you can look for Teresa at the entrance, or either hand them out to me or Teresa over there from A2II. But this is one thing that is very important for us to understand how how did you like this, and if there is any room for improvement for the next year. Secondly, we will have a workshop right after this break. It will be a longer break. And I would like to invite Bert, who will be facilitating the workshop, to run us through the process. There are some things that we need to discuss prior to the coffee break. So, Bert, if you would like to take the floor. And once we've heard what Bert will tell us, we can be back in the room at 11:30 sharp for the continuation. Thank you so much.
All right, good morning everyone. I hope you're enjoying this morning. We have been hearing a lot the past couple of days, both at the AIO conference and yesterday and this morning. So it's time to put it into action and to see what it really is when we do that. So when you come back after the break, you will be part of an insurance company that is going to build some solutions for some of the low-income communities that are struggling related to climate change. And I already want to assign you into the company so that you get a chance to get to know your colleagues. So we want to have a bit of a fair split. If you speak French, please keep your headphones on or put them on anyway, so that, that we can make sure that we have groups that can really understand each other. So may I ask the regulators in the room, if you're working for a regulator, to just stand up, please. If you're with the regulator, please stand up. All right, so that's 1, 2, 3, 4. All right. So may I ask the regulators who speak French, can you come forward, please? If you speak French and you're a regulator, please come forward. All right. So you can go over here. Here. Okay. Voilà, vous pouvez ici. I hope you're not colleagues. You can join that group. Right, so then we have more regulators that speak English. You can come this side. Get close to your colleagues so that we can, voilà. Alors, les collègues ne peuvent pas se... Wow, okay, so you can go into 3 different groups, but please try not to be with your colleague if that would be the case, okay? So go into 3 different groups. So you're 1, 2, 3, 4, 5, 6, so 3 times each. So you will be one group, you will another group. Don't move, you're gonna go here. And then can you join the ladies team? Cool. All right. So whoever is seated is from, are there any policymakers in the room? Are there any more policymakers in the room? I think so. Are you policymakers or industry? All right. Please, so those who are done... Oh, there is some dispute in the companies. You're already hiring people back and forth. Okay. So you're from?
Continental Re.
All right.
But I have to be leaving. Sorry.
Oh, okay.
And that's
no
why
worries.
I'm not joining this group. I have to leave.
You can come to the front. No, that's cool. We'll need you as well in the groups. We do. Yeah, we'll have now the industry joining. You're also from the association, isn't it? So please join one of the 3 groups over there. And may I invite you as well to join one of the groups? So one of the English groups here. Oh, vous parlez le français? Voilà, vous pouvez joindre un de vos collègues régulateurs. Please, join one of the groups. And Victor, can you also join one of the groups? You can choose. You can come here. Yes. And you can join this group. All right. So this will be your groups after the break. So please, you can see who is in your groups. You can already chat a little bit, define a little bit how you are. And then when you come back after the break, please take one table where you can go and sit together. Is that okay? So enjoy the break. We'll be back at 11:30 to get you to work. Okay. See you in a bit.
Test. tenderness. You'll never buy my love. Your eyes don't shine, don't shine. Don't shine. They were mine. No. Your words don't shine. They were mine. No. Don't shine. Don't shine. Don't shine. They were mine. No. Your words don't shine. They were mine. No.